Welcome to TQR. I am Sharad Vaze, practicing chartered accountant for more than 39 years. Now we have this series of tax queries and replies where you will be raising the questions or queries or issues, and we will try to reply them to the best of our ability and knowledge. The replies will be given in, as of now, 8 different languages, and we'll try to add more and more languages so that it will reach to the most commonest person. It is meant for the common person and not for professionals or tax practitioners. Now, the query which we have received today is in respect of one person who is taking some residential flat on rent, and the flat is owned by a non-resident as he claims. So whatever rent will be payable to that non-resident, it will be paid to his NRO account, which has been indicated by the non-resident. Now the person who is taking the flat on rent, he has raised the issue, is there any compliances requirement to be followed under Foreign Exchange Management Act, FEMA Act, or any other act? Because as you are aware, general public have become recently very much cautious about the money laundering or the enforcement directorate whenever a non-resident or a foreign exchange is involved. So it was a simple question regarding the rent being paid to a non-resident. Does he require to comply any provision of the FEMA or other statutes? To my knowledge, there is no requirement as to the compliance under the FEMA Act. However, under the Income Tax Act, since the property, that is residential flat, is situated in India, the rental income received by that non-resident is taxable in India. Of course, he no doubt enjoys the basic exemption limit of 2,50,000, 3 lakh or 5 lakh, what we have seen in our first episode. Since the rent is taxable in India, the person paying rent has to deduct tax at source from such payment. Now the rate at which it is deductible is 30% tax plus surcharge at the rate of education says at the rate of 4%. So it comes to 31.9 to 31.2%. So in short, if he is paying the rent of rupees 10,000, or the rent agreed is 10,000, therefrom 3,120 needs to be deducted and paid to the government as TDS, and the balance amount of 6,880 can be paid to the non-resident's bank account. So this 3120 liability or the responsibility is on every person taking the premises, taking the flat on rent belonging to or owned by a non-resident, and there is no minimum limit applicable to this particular section. That means in other sections as applicable for TDS, there are some exemption limits beyond which you have to deduct tax at source. But in the case of any payment made to a non-resident, and if that payment is chargeable to Tax India, is liable to Tax India, a tax must be deducted at source. At present, as just indicated, the tax rate is 30% plus cess of 4%. Now for this purpose, the person paying the rent must obtain a tax deduction account number and pay the tax every month or within 30 days or within 7 days of the end of the month in which tax is deducted, and within 30 days after the end of each quarter file a tax deduction return to the NSDL or notified authorities. Now if there is a delay in filing this TDS return, then there is a fine of rupees 200 per day till the date of default, but not exceeding the amount of tax that is deducted from the rental payment. So if you are taking a flat on rent from a non-resident, then you must have tax deduction number, what is popularly known as a TAN number, deduct tax every month, pay tax every month, files quarterly returns Otherwise, if there is a delay, as indicated earlier, 200 rupees per day. Suppose a person fails to deduct and pay the tax, then the Income Tax Act provides penalty under section 271C, 271 capital C. Under that, the penalty is to the extent of tax that should have been deducted. In short, if you fail to deduct tax at source while paying rent to a non-resident, then from an example we have taken earlier, 10,000 per month, in short, 3,120 will be the penalty payable to the government for failure to deduct tax at source. Having deducted tax at source, and if there is a delay in making the payment, then you have to pay interest at the rate of 1.5% per month. Quarterly return is to be filed. For every delay of a day, per day, the fine is rupees 200 per day, and all these three things are mandatory. That means there is no escapement. So if your landlord is a non-resident, please take proper care of deducting tax at source, and in these such situations it is advisable that you have prior consultation with your tax professional as to the procedure of obtaining PAN, obtaining TAN, payment of monthly tax deducted at source, as well as filing of quarterly returns. So again, at the end of the TQR, as a caution, we advise that before coming to any conclusion, kindly have your consultation with the tax professional, maybe advocate or a chartered accountant, for the simple reason all the facts may not be included in your query, or there is a time gap between the issue answered and the day on which you are going to apply it. In between, the law might get changed. So thank you very much.